Take with time frame is the reason why 99% of traders still lose money in the industry, because they jump into trades without knowing the market's direction. So today I'll be showing you how to use time frame the right way. Greetings traders, how are you doing? So without wasting much of our time, I told you people yesterday that today we'll be talking about time frame. So let's get it started. What is time frame? This is the time prescribed to different charts. As we all know, there are different types of time frame. We have the weekly time frame, the daily, the 4 hour, the 1 hour, the 30 minute, 15 and the 5 minutes. It can be used to understand more about the charts at a particular time. Here, with the help of time frames, with the help of different time frames, we will see the chart in different perspectives. It helps us understand the chart in different perspectives. It helps us read the chart in a profitable way. Okay, let's get it started with the first one on our list. We have the weekly time frame. This is obviously as it sounds, looking ahead from the potential direction of the week. As it sounds, obviously that is what it is, a weekly time frame. This time frame tells us that each candlestick that is being formed on a weekly time frame, it takes one whole week for a single candlestick to be formed. It takes one whole week. Do you know how it takes a whole week? Different buys, different sales, different ranging that happened in a week, all compiled in a single candle. Wow, that's amazing. Yeah, it takes a whole week. It takes one whole week for just one of these candles to be formed. As you can see here, this is week 1. This is candle for week 2, candle for week 3, candle for week 4, candle for week 5. So it takes 5 weeks. That is a month and 1 week for these candles to form. Wow. So the weekly time frames help us to understand the direction of the market. It helps us to have a clear insight on where the market is headed to. So without wasting much of our time, let's go to our live chart so that I will show you how the weekly time frame works. So guys, this is a weekly chart. So each of these candlestick you see here takes one whole week to form. Each of the candle takes one whole week to form. Each of these candle. This candle takes 1 week. This candle 1 week. This candle 1 week. That is, it takes a whole week to form just a single candle. A whole week just to form a single candle. As you can see here, this is 1 week time frame, and this is weekly candlestick. So just imagine how long it takes for this price action here to form. All this price action that happened, all this buy that happened, just imagine how long did it take for this price action to happen. Wow, that is massive. That is a whole lot of time that it takes for this price action to happen. So the weekly time frame helps us to know the direction in which the market is headed to. Like for this week, now you will know that okay, this market is in the uptrend, because why? It's just channeling all its focus, all its energy to the upside. So as a wise trader that you are, the only thing you are expected to do is to look for more buys opportunity instead of looking for sales, because the weekly time frame already gave you a directional bias on where the price is headed to. So that is that for a weekly time frame. So let's go down to our daily time frame. Our daily time frame. The daily time frames shows the overall direction of the market by combining all price movements on one full day into a single candle. I don't know if you get what I just read right now. The daily time frame shows the overall direction of the market by combining, take note of this keyword, combining, by combining all price movements of one full day into single candle. That is, everything that happened on the charts on the full day just happened inside this one candle. The buy that happened, the sell that happened, still inside this one daily candlestick. Still inside this one daily candlestick. Let's go to our chart. Also, let me show you how it looks in a real chart. Yeah, this is how it looks on a real chart. This is how it looks on a real chart. Everything that happened in the market on a single day, all are being compiled into a single candle. The buy, the sell, the whatsoever, they are all compiled inside a single candle. Okay, let me show you. Let me just map out this daily candle and go down to a lower time frame to show you what I'm talking about. Okay, let me mark out this whole daily candlestick. Yeah, then let's go down to our 15 minutes. Guys, can you see what I'm saying? Just a single candle from a daily time frame that give series of lower high, lower low, lower high, lower low on the 15 minutes time frame. So that's what they are saying. A daily time frame also helps to identify a directional bias on where the market is headed to. This also helps for clarification to tell you that okay, there is a retracement that happened here, either going to respect an order block from a daily time frame also. So it's just also trying to signal buyers that be at alert that very soon the buy move will continue, all coming from a daily time frame. So guys, we all need to understand different type of time frames because it helps. As you can see on this daily time frame here, we had series of higher highs and higher lows. We had this higher high that gave this higher low, which resulted to this higher high that gave this higher low, which is also the reason for this higher high. And guys, as you can see what I told you yesterday concerning trend, that every impulsive move that happened, there needs to be a correctional move. Guys, as you can see here, when this higher high happened, then what happened? Price is giving a higher low that will result to a higher high. So we just have to be observant in the chart to know what price is doing and also not to neglect any time frame because they are of utmost use to all of us. You understand? So the understanding of every time frame is of use and the growth to our journey in the forex industry. As you can see, this daily time frame here, what I just showed you, it helps to understand a directional bias. It gives you clear insight on the direction where price is headed to. So do not neglect any time frame for no reason. Make sure you read the chart from your higher time frame down to your lower time frame, so as to 4 hours time frame as we have here. So as to our 4 hours time frame, the daily sets the bias, the 4 hour confirm the structure. The 4 hour, what is the work of 4 hour time frame? It confirms the structure. It tells you that yes, what the daily time frame says is truth. That is the work of 4 hour time frame. It confirms the structure, and the lower time frame executes the trade. We'll still get there. Note, Note this, guys, note this is very important. Write this down somewhere, you will not forget it for anything. If you skip the 4-hour time frame, you are trading blind. That is just the fact, guys. If you skip the 4-hour time frame, you are trading blind, because 4-hour time frame, it helps you to confirm the structure of the market. You understand? It helps confirm the structure of the market. So do not skip the 4-hour time frame for any reason. Do not skip the 4-hour time frame. Make sure that you make use of all your time frames. They are very important. Do not neglect any time frame. Do not reason any time frame that this time frame is not important. They are all important, guys. They are all important. So make sure you apply all the time frame, put them into works, and see how your trading journey will elevate. So that is that for our time frame. Let's go to our rate chart so I can show you how the 4-hour time frame is of help to us. Yeah, as you can see, guys, it helps confirm the structure. Guys, you can see our daily time frame tells us here we are in an uptrend. Our 4-hour time frame is also telling us that we are in an uptrend. So what do we need to do? We need to keep looking for buys opportunity until our higher time frame says otherwise. We need to keep looking for buys, guys. Keep looking for buy opportunity until the higher time frame says otherwise. But for this reason, as the 4-hour time frame says we are bullish, then we need to look for buys onwards, guys. So that is just the work of the 4-hour time frame. The 4-hour time frame help us to confirm the structure from our daily time frame. So we don't need to neglect any time frame, saying this time frame is not important. This time frame, they are all important, guys. They are all important. All the time frames are important. Guys, make sure you are taking note of what I'm teaching here, because they will be of ultimate help to you guys. Very, very helpful. So take note of everything that have been jotted down here and try to apply them on your chart whenever you are free. Try to review them yourselves whenever you are free. So guys, let's move on. Let's go down to the 1-hour time frame. The 1-hour time frame shows how price move within the day, with each candle representing 1 hour. Traders use it to see clear structure and time their entries after confirming direction from higher time frame. Guys, do you understand anything? Outline this keyword and time their entries after confirming direction from the higher time frame. What is the work of the 1-hour time frame? It gives you where to enter from. It shows you where you should be looking for possible buys or sell in the market, aligning with your higher time frame, aligning with the direction that your 4 hours give you, aligning with the direction that your 1 hour give you, aligning with the direction that your daily time frame give you. So 4 hours help you to confirm entries from your higher time frame. So guys, every single candlestick you see on a 1 hour time frame forms in a space of 1 hour, 1 full hour that it takes a candlestick to form on a 1 hour time frame. So guys, for 1 hour time frame, it gives you the time to know when to enter the market. Aligning. Do not trade this word for anything, guys. Aligning. You must align with the higher time frame. You must align with your daily time frame, aligning with the higher time frame. It's very important, guys. You need to align with your higher time frame. You not just come to your 1 hour time frame, you say, okay, the market is bullish, you need to look for buy. No, your daily time frame can be saying otherwise. Your 1 hour time frame can just be a form of manipulation. So you need to align with the higher time frame, guys. Very important. Yeah, I think that is that for 1 hour time frame. Going down to our 5 minutes time frame. Yeah, this time frame is my entry time frame. If you look my recap, most of the times I use 5-hour time frame sorry guys, I use 5 minutes time frame for entries. 5-minute time frame, which is also my entry time frame. Think of it like zooming in. The daily and the 4 hours show you where the market wants to go. The 1 hour show you the paths, and the 5 minutes tell you exactly when to enter or exit the market. Let me repeat. Think of it like zooming in the daily, and 4 hours show you where the market wants to go. The 1 hour shows you the paths, and the 5 minutes telling you exactly when to enter or exit the market. Yeah guys, so this 5 minutes time frame is used as entry, not to know the direction of the market. You cannot use 5-minute time frame to spot out a directional bias. It is not. This is where most traders get it all wrong. This is the reason why most traders lose money in the industry, because they are bent on 5 minutes time frame, bent on 15-minute time frame, bent on 1 hour time frame, trying to use lower time frame to know the directional bias of the market. Meanwhile, their daily time frame is saying otherwise. Meanwhile, their 4-hour time frame is saying otherwise. They keep losing money. So except you take note of this and put it into correction as a trader, using 5-minute time frame to know a directional bias, you are just open for losses, unnecessary losses. Not that losses is not part of the game. Yeah, losses is part of the game, but there's what we call unnecessary losses. Losses that are not necessary. They are not necessary to happen, but based on you are focused on just a lower time frame which has series of noise in the market. Lower time frame are very noisy. If I go to the okay, let me go down to my 5-minute time frame. Let me tell you the reason why I say lower time frame are very noisy. Come in. Let's make sure you take note of all this illustration I'm giving in the chat here. They are very, very important. Okay guys, look at this. Can you see what the 5-minute time frame is doing? Can you see a lot of noise that is happening here coming from the 5-minute time frame? That's why it's advisable. Okay, can you see buy sell coming from a 5-minute time frame? So the use of a 5-minute time frame is to just know when to enter or exit the market. The 5-minute time frame is not used to know the directional bias of the market. It is not used to know if we are in a bullish trend or a bearish trend. It is only used to know when exactly to enter and to exit the market. So guys, if you can just take correction of this thing I outlined about this time frame, guys, you are good to go. You are 10 steps ahead of those people who are bent on sticking to just lower time frame. So you just need a higher time frame. You need to know the use of all the time frames in the market, because they are of different use. You need to know the use of all the time frames in the market and apply them properly on your charts to avoid unnecessary loss in the market. So guys, I would like for you guys to take note of all these things that I wrote down here, because you jotting them down, going through them later will help you a long way. So guys, you can take note of all this and put them into practice. Put them into practice. You need to think smart, guys. Think smart and trade smarter. Very important. You think smart, you trade smarter. Notwithstanding, guys, you all know the drill. Tomorrow we come again, and our topic for tomorrow will be on lot sizing. Very important. We need to talk on lot sizing. We need to know, because there are different type of lot sizing. There are different type of lot sizing in the market. There are lot sizing that will give you $10. There are at the same time lot sizing that will give you $1,000 with the same price movement. So guys, you need to subscribe to the channel, turn on your notification bell, like the video, and get ready for the next topic. Most importantly, guys, drop your comments below. Drop your comments on what you learned, on how this video was of help to you, and still on topic you want me to talk about. I'll be of great help to help you guys. So stay tuned. See you guys. Stay safe out there.